Chapter 3, the adjusting process. This can be one of the more difficult to understand chapters in the book. For some reason, our students seem to have a tough time understanding adjusting entries. So Chapter 3 covers this in some detail. There's a couple of videos you'll be able to watch, and we'll get a lot of practice at making adjusting entries. So what is an adjusting entry? What happens in accounting is that because we're on the accrual basis of accounting, this is a GAAP requirement, revenues are reported on the income statement when they are earned, and expenses are reported on the income statement when they are incurred. As a result, there can be timing differences in both of these events. This principle is referred to as the matching principle. We have to match revenues earned within a period to the expenses incurred within the same period. Basically, this is simply fairness. It's the way we're keeping score. We can't count revenue in one period and expenses in another. It simply wouldn't be fair to the reader. So at the end of the accounting period, whether it's a month or 6 months or a year, we have to make adjustments to some of our accounts, namely our revenue and expense accounts. So this process is called the adjusting process. Doesn't mean we made a mistake or anything is necessarily wrong. We simply have to bring the accounts up to date to reflect the matching principle at the end of an accounting period. You'll get plenty of practice with adjusting entries within this chapter. Some of the more common entries would be prepaid expenses. If we pay for insurance in advance, let's say for 1 year, and we're closing our books at the end of 1 month, unless we reflect the fact that we've used up 1 month of insurance, it will not show up on the books. So we have to make an entry to reflect the fact that we've used up 1 month. Unearned revenues would be another area. Accrued revenues, unrecorded expenses that have been earned, and then accrued expenses, unrecorded expenses that have been incurred, yet to be paid. So we'll take a look at all these during this particular chapter.